Hello guys, this is Max here from Daily Market Movements. Welcome to another episode where today we're going to be analysing the S&P 500, the Nasdaq100 and the Dow Jones 30 on this shortened trading session and of course this shortened trading week. But just before I start today's video, anyone who would like to join my free trading signal group, then please scan this QR code on your screen. It will take you to my website where you can sign up. It's also where I post free daily market research every single morning before the US markets open. And it may help you navigate through the markets during these volatile times. But let's get started with today's video. S&P 500 currently trading at 4,453. Of course, the markets were only open for a few hours today as tomorrow the US celebrates Independence Day. So I kind of see today's trading session as just, an option for, global investors or global participants within the US stock market to open and close transactions. So not too much volatility to report on. S&P 500 currently up around 0.23%. And I think that what the main message I continue to send across my YouTube channel and especially within my free trading signal group is that many investors think, the S&P 500 has run up so far, we're overbought on the daily RSI, and we're going to probably crash another 5 to 10% in the coming weeks ahead because we've just gone up too far. I would say to those investors, and if that is someone like yourself watching today's video, if you have that same opinion on the market, I would definitely ask you to broaden out your analysis. Go onto the weekly chart where the RSI is actually not even at 70 yet. Also go onto the monthly chart where the RSI is currently sitting at 58. Last year we did a lot of damage within this stock market. That was of course the bear market. And, yes, we have gone up a lot in a very short period of time, but it doesn't mean that we have to go back to the October lows. It doesn't mean that we have to go back and crash down towards, let's say, 4,000, because I don't think that we will. I think that we are, we could easily continue to see a rally high here. I think that the S&P 500 is destined to trade up towards at least 4,500 in the coming weeks. From a seasonal perspective, we still have 2 to 3 very strong weeks. It's not really until the 23rd of July that we start to see a shift in sentiment, especially when it comes to seasonal trends in the market. So the 21st of July is a potential turning point as we go through the month of August, which is quite normal. Of course it's summer, so many investors do take August and most of September off as a holiday month, so you can expect to see low volatility, hence low liquidity in the market. But let's just quickly go over to the Nasdaq100. Nasdaq100 very similar to the S&P 500 daily chart. We are approaching that overbought territory with a reading of 66. But if we broaden out our analysis here and we go on the weekly chart, okay, we are overbought on the weekly, but if you go onto the monthly, we're nowhere near considered to be overbought. We currently have an RSI reading of around 62. So can this move higher in the Nasdaq 100 continue? I think so. If we draw that fib chart from the peak to trough of the 2022 move, we do have that 0.786 fib area, which sits at around 15,400, and we're currently trading 200 points below that. So I wouldn't be surprised at all if we did see a move slightly higher of around 1.5% towards 15,400. I think once we get to 15,400, that could potentially give us an opportunity to pull back and to perhaps consolidate, especially as we enter into the mid of July, where I expect perhaps this bullish trend to kind of reverse course for a month or two as we work our way through the month of August. But I definitely am not one of these investors looking for a 5 to 10% crash at all. I think that this market is going to continue to outperform, especially as we move into the second half of 2023, because a lot of the smart investors in institutional money missed this run up. They were they're very much invested in very defensive names as well as cyclical names, energy names, for example, and financials, and they missed this massive tech run. So I think that they're going to continue to try and look to put money to work in this space in the second half of 2023. And I just believe that we're in a dip buyers market. Every time this market pulls back, let's say 2 to 3%, like we saw over the past couple of weeks, it's just going to continue to get bought. So I like buying dips here in the Nasdaq 100, and I don't expect too much of a decline in the coming days and weeks ahead. And then moving over to the Dow Jones 30, very strong performance here from a Dow. We have this inverted head and shoulders pattern. We bounced off the 50-day EMA last week, and we're trading pretty much near the swing highs here, up around 34,500. So this is very close now to breaking out of these previous swing highs. And then once we do that, I think then we go to this high that we formed back at the end of 2022, where we did go and trade as high as 34,800. So I think 34,800 to 34,900 will be a target in this market. I think that we could potentially even trade up towards 35,000. So I think the broad message, just to conclude Today's video is that I like dip buying in all three of these indices. I still believe that we are going to have a few more weeks of strength as we work our way through to mid-July. And, I'm looking at mid-July for perhaps being a reference point as to where we may start to digest some of these recent gains that we've seen as we work through the month of August, which from a seasonal perspective is quite a weak month. But that's it for today's video. If you've enjoyed it and you would like to be part of my free trading signal team, then all you have to do is scan this QR code on your screen. It will take you to my website where you can sign up.